It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 1st fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is really what it's all about. So let's go take a look at one of our tools. I love this tool. This is the tool that I call the present of being present. Now, focus concentration, folks. Focus concentration is a cornerstone for achievement in anything you do in business and all the areas of life. You've got to zero in on whatever it is that you want to do. You've got to identify your target and let nothing stand in your way. You've got to keep your eye on the target until you've released your arrow. Let nothing ever divert your attention. Let no obstacle before you get in the way. What you want to do is you want to find a way around it. And when it comes to obstacles, what I want you to do is I want you to be an ant. It doesn't matter whether you go over the obstacle, under the obstacle, around the obstacle. Always try to find a different path until you prevail. And the key, folks, is concentration. Concentration is crucial. You've got to focus. You've got to filter out the noise and all the clutter that gets in your way. In today's day in life, that's a little bit more difficult than easy. Most of you've got a cell phone or smartphone, some type of device near you, so you're getting pinged about 3,000 times a day with clutter that comes into your life. So you've really got to have more focus today than you did a year ago, 10 years ago, 20 years ago. Focus concentration is absolutely critical. And focus concentration, folks, and when you decide to go ahead and get rid of all that clutter, that is how you get around negativity. Yesterday we talked a little bit about negativity, because negativity, folks, that is the obstacle that will get in the way of you accomplishing that which you want in life. Let me ask you this question. In a tennis match, whether you've played tennis or not, in a tennis match, how long does it take for your opponents to return the ball? Well, if you're a pretty good server, it doesn't take very long at all. And what happens if you lose your concentration? Pretty simple. The game is over. It's over before you know it. If you lose your concentration during the presentation that you're giving, you could lose it all. Concentration, folks, takes a lot of discipline. But discipline plays off, and it plays off big time. So when you're at work, be at work. When you're in a meeting, be in the meeting. When you're with your kids, be with your kids. Wherever you are, be there. Focus concentration will pay off. One of the greatest enemies of concentration, well, we know that's worry. And worry gets in the way of concentration. And most of our worries are what? They're things we can't control. Instead of worrying, just do the best job that you can do at whatever it is that you're doing. When it comes to trading or investing, focus on your pattern. Focus on your indicator. Focus on your signal to enter the trade, to exit the trade. Focus on your money management and pull that trigger. Shoot that arrow when you get your confirmation. Then let that trade do its thing. You can't control the trade, so why worry about things you can't control? Your focus, folks, needs to shift to your next trade. Go be a treasure hunter. Go find that next trade out there. Concentrate on your next trade instead of worrying about the one that you are in. That is what it's really all about. In the end, folks, focus concentration will pay off. Why? Because it is the present of being present. So let's go take a look at the presents and the gifts in these markets out here. We've got futures up this morning. They were already up maybe about, the Dow futures were up about 60, 70 points or so before the jobs numbers. It is Jobs Friday out there. Are we going to have a pop and drop? Well, I will tell you the probability is really high that we're going to see a pop and drop. We'll see how the day plays out. So far, playing out as the script was written. So you had futures up this morning. We'll take a look at the ES Mini when we go shift over to my chart, or you can take a look at the chart that we've got up on the screen. It's the ES Mini 30-minute chart. Payroll was up 157,000 in January. Unemployment rate ticked up to 7.9% out there. So let's go take a look at the markets. What we do have up on the screen here on the ES Mini is that 30-minute chart. Now, we know where the bulls are really hanging out. The question's going to be, how will they defend their position as the market moves down? If the market moves down, what did the market do this morning as we came into that 9 o'clock hour? Well, pretty simple. It went from being not overbought or oversold to what? To being overbought. And what are we seeing right now? We're seeing the market pull back. We know that when a market condition gets into overbought or oversold, it has to work its way up. And it's going to do that by either moving sideways or pulling back. This case here right now, just pulling back slightly. I mean, you've got the S&P futures up about 9 points, trading out at 1502.25. Yesterday when we came on the air, I did give you a buy signal out here if you were an intraday trader, and that was pretty easy because we knew that the ES Mini was coming down and testing what? Testing exactly where the bulls were defending their position. It was so clear, which was at the 1491.25 level, so clear because of a couple of things. Number one, it was a hammer candle. And those hammer candles, folks, they are very telling. They help you to and especially when a hammer gets defended. Well, if we took a look at that 10:30 a.m. hammer on January 28th, that certainly was defended as the market pushed down into it at about 7 a.m. on January 29th. And then we had another test yesterday as we were coming in to the show right at 9 o'clock. You had that hammer area being tested exactly, 1491.25. So we know that was a defensible position for the bulls out there. Never really got, even with the market Dow closing, the S&P closing off a little bit yesterday, that level not ever being pierced other than coming down and testing it in that 9 o'clock hour out there. Now, what happened? Well, we've had the market move up to the top of its range, get into the overbought territory. So now doing 100% move out there. We'll see what happens here when the market opens, but it is not unusual, folks. It is not unusual at all. If you like the probability statistics of the January effect, and that's all that they talked about on the air yesterday was, as January goes, so goes the market. Of course, I don't really believe that anybody that was talking about on the air actually went back and took a look at the statistics going back to 1928. I say always do the homework out there. Always do the homework. Well, if you were doing homework on Jobs Fridays, you would know that you've got a higher probability of what happens on Jobs Friday than you do of understanding what happens during the January market effect out there. Well, our call number is 877-927-6648. Would love to hear from you. We're going to go take a look at the U.S. dollar index. I've sort of neglected the U.S. dollar index here over the past. Quickly, as we take a look around the world, see what's going on in the markets out here. Over in Asia last night, the Nikkei was up 53 points out there. Nikkei is on the gas pedal. The Hang Seng down 7. The Shanghai was up 35. Over across the pond in Europe right now, the DAX is up 33 points. That's 0.4%. The FTSE up 40 points. That's up about 0.6% out there. And let's go take a look at the U.S. dollar index, because this chart here that we'll go ahead and put up on the screen has got a little bit of everything and a number of the patterns that folks like to. We'll take a look at the U.S. dollar index. We'll look at it on different time frames out here. So the first time frame that we're going to take a look at is going to be on the daily chart out here. Why on the daily chart? Well, if we take a look at it, and we're going to do this for Rick in British Columbia, because he loves those head and shoulders patterns out here. So if we take a look at the U.S. dollar index, clearly a head and shoulder pattern. You got the left shoulder out here forming somewhere in the October, I'd say between October 1st really to the October 11th area. You've got your head that came out here, the high of November 16th, and your right shoulder forming really right around the January 4th to January 11th time frame. If I take this little tool out here, just simply from a timing standpoint, and I go from the left shoulder to the head, you can see that you've got, what this helps to identify is you've got equal matching in time, and in essence, the level of the price doesn't so much matter. It's about being in the range. But you can see here with regard to the formation of time that it took from the left shoulder to the head and the head to the right shoulder really works out very, very well out there. So a good head and shoulder pattern. Now what we have is the neckline. The neckline is really important. And if we take a look at the neckline, what you would use, you'd use that low of September 14th out there out at 78.72. Your next touch point is going to be one of our hammer candles out there. We were just looking at that hammer candle on the ES Mini and how important those hammers are. Remember, when it comes to a hammer, and you get a close, not a test, not a move below it, but a close below it. If you're long, you are wrong. Well, we take a look at the hammer candle inside the daily chart of the U.S. dollar index. That is the December 19th level. That's down at 79.01. Right now, you've got the U.S. dollar index trading out at about 79.01. So a very key level. But take a look at the neckline. The neckline, your second touch point, is going to be the bottom of that hammer candle at 79.01. What we are seeing today is we're seeing a test of that neckline. There's a couple areas of support as we take a look at the U.S. dollar index. You've got the hammer, you've got the neckline, and then you've got this little horizontal. And horizontal support is stronger than any other level of support that is out there. So even if this hammer gets broken, even if the neckline gets broken, what we'll likely see is we'll see a test of the horizontal support, which is down just a tad further, right around the 78, 72. Today's going to be a very important, very telling day. The currencies are on fire. We're going to go take a look at the currencies, because the U.S. dollar index is nothing more than a basket of currencies. It's a basket of currency between the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and what's the other one? I'll think about it. The Swiss franc. And so that is your basket of currencies out here. It's going to be important to be paying attention to the U.S. dollar index. We can also see in the overbought, oversold indicator, the U.S. dollar index getting down where? Getting down to the level of being oversold. Not completely there, but the battle out here and the chart to be paying attention to is going to be this U.S. dollar index. Why? Because if these levels get broken, that's when you start going and taking a look at the longer-term chart. And if we were to go take a look at the monthly chart of the U.S. dollar index, and this would be what you bulls, every bull out here would want to see. If you take a look at these shaded red patterns out here, this could set up a move down to 65. But we'll see. One thing at a time. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And, first order of business is we've got a tiger that needs all of our help out there. One of our tigers, Marvin, his daughter, an active Navy wife and mother of 3, is on her journey to find a solution for the onset of brain seizures. So let's send out as much white light as we can to Marvin and his daughter and family out there, and in hopes that will help to overcome the obstacle that she has to deal with. So send out all that white light. If you're driving around and you see some white somewhere, just grab it with your mind and send it off. We've got a tiger in need of our help out there. As we come back to these markets out here, popping in the pre-market, we've got Netflix closed at 165, trading out at 170 right now. Apple closing at 455, trading up right now at the 458 level. We've got Lifetime Fitness, apparently not as in shape as it needs to be. They closed at 50.73. Their ticker symbol is LTM, by the way. Trading right now at 42.40 out there. Ticker symbol ALKS, Alkermes PLC, trading out at 21.66. That's down a couple of bucks. Merck, MRK, Merck closed at 43.25 out with earnings. I believe they had their earnings release. Regardless, they are. Now, is that right here? Give me a second here. 43.25 is what they closed at, trading out at 41.95 right now. Back to the U.S. dollar index here and just take a look at the monthly chart. And something to be paying attention to. Look, monthly is more of an important chart from a trending standpoint than a signal, than weekly, and weekly more important than daily, and daily more important most certainly than a 30-minute chart out there. And what we can pay attention to is if you're watching Tiger TV, maybe you're listening on TFNN on the radio or maybe TFNN.mobi. Don't forget you can always catch this show, the streaming version of this, with your smartphone device. Just go to the homepage of TFNN.com. Over on the right-hand side, you'll see those 3 little smartphones out there. Click on it, and you'll get the live stream. Or you can always catch the archive of this show on Channel 9, just so that you're able to follow along and take a look at the charts. And what we're looking at here is a chart of the U.S. dollar index. This is a monthly chart. This is quite a channel line. We're taking a look at, the downtrend channel really after the highs back in February of 2002 out here. What we can see is that the U.S. dollar index, the first break on a monthly basis was in May of 2012, a break with conviction out of that price channel. What we know is that when you break a channel, eventually you're going to come back and test it. And you got a bearish engulfing candle out here the month of August 2012, and price has not been able to close up inside that candle ever since. So it still hasn't broken the lows of the breakout session, which would be May 31st, 2012, but it's not a bullish-looking chart if you take a look at the monthly chart on the U.S. dollar index. So we know that today it's going to be important to be paying attention to whether or not the bears or bulls are going to be the ones in charge of the U.S. dollar index. We've got several patterns, several areas of support out here, and we'll see if the U.S. dollar index here turns bullish today. If it turns bullish, we're certainly going to see a pop and a drop inside these markets. So we go take a look at the other currency pairs, just simply since we're in the currency marketplace, we could take a look at, this is the big one. This is the big kahuna, because this one here is the one that really tracks the S&P 500 better than any other currency pair, and that is the euro Japanese yen. Trading out right now at 125, 221. Now, this thing has been on a tear. You want to talk about getting into overbought conditions. Well, this baby is it. Now, we're looking at a weekly chart on here. And on a weekly chart right now, what it's trading into is a set of swing points back in April of 2010. And I suspect what we're going to see is we're going to see one more week where this thing is going to make a little bit higher high. This thing here, if you're taking a look at my chart, so you take a look at some of these numbers that are on the screen, they're small. Man, I'll go ahead and identify them for you. You've got a 13 number right up here, and 13s are the key number to be paying attention to, because those are levels where you've really got a stretch in trading. This is called the TD combo system out here, and oftentimes, very often, you will see some type of reversal. Last time we saw a TD13 combo come up was back on the weekly chart back in April of 2011. It's up and over that set of swing points right now. That was in the 123.31 level. Well, we get one more higher week, which would be next week. Just a little bit higher move out there. That on a weekly basis will cap a 13 level. Is that important? Well, sure. Just take a look at it on the Euro Japanese Yen weekly chart down around the October 2008 time frame. That is really what one of the things that stopped the descent in place out there. So we're seeing just the opposite. Won't complete this week, but it would complete next week. 877-927-6648. We get back, we're going to go see how these markets are going to pop. You got the Dow futures up 105, S&P up 9, composite, NASDAQ up 20. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 86 points, Composite up 20, S&P's up 8. Small caps up 3.5. Google having a good morning here, up 0.7%, up $5 and change. Apple up $1.51. Not really doing a whole lot, not just yet. Microsoft up 22 ticks. Intel up 12. Cisco up 5 pennies, leading the charge to the upside. Perrigo, PRGO is the ticker symbol. They're up about $5 right now. Perrigo out with earnings. Let's see what they did here. Earnings-wise, earnings per share of about... I just have the estimates here, so let's see, where are the numbers? There we go. Net income, $106 million versus $99 million. Net sales, $882 versus $838 out there. They're having a good morning, up about 3.5% right now. Google, as I said, up $5.30. Netflix in the lead here, up $5.60. That's up 3 3/10%. Chubb, CB is the ticker symbol. They're up 4% this morning. Let me see here if they were out with earnings. They are. Net income, $102 million versus $452 million a year ago, and they are having a little trouble there. What do they have? Oh, they announced a $1.3 billion stock purchase plan. Oh, that's a good use of their money, most certainly. That is on Chubb CB out there. To the downside, Lifetime Fitness. We're going to go take a look at that chart here. LTM is the ticker symbol. So let's go take a look at this because the fitness routine for the stock, not too good. But let's take a look and see what kind of volume we have in this equity. Ooh, you've got some big volume coming out of this. Look at this. You got some reversal signals up at the high. But let's go ahead and put all of the little indicators out on this chart here. And before we go study it, we're taking, again, a look at Lifetime Fitness. And, of course, we can see it did get up towards that overbought condition as was making a high on January 25th. Had the bear sash candle on January 28th. Some follow-through on the next session out here. In fact, you had that volume off of the top there on January 28th. Yesterday we talked so much about volume off of the top and the importance of being able to identify that. Well, now we've got Lifetime Fitness volume so far in just 6 minutes of trading, 1.3 million shares. So now you really have, this is the markdown phase, folks, and markdown phases are very nasty. It's why you need to be paying attention to bullish and or bearish, in this case here, bearish signals, and that's really what we've got across the board in all of the indexes. The S&P 500 is the only index out there where the summation index has not turned down. It has turned down in the Wilshire. It has turned down in the inside the New York Stock Exchange. It's turned down in the NDX. It's turned down in even the Dow. Well, I take it back. It's the S&P and the actual NASDAQ composite where it hasn't turned down. It turned down a couple days ago in the NASDAQ composite. Turned up just slightly yesterday, but the signals are out there. The topping signals are all over the place. I mean, all over the place. I know everybody's talking about Dow 14,000, and as January goes, so goes the market. But just present, as I said in the opening, it's all about being present. And in the present means go take a look at the markets and really all of the signals that are out there. So if we take a look at the signals here for Lifetime Fitness, let's go take a look at where this thing is moving back into. It's going to be taking out the swing point out here, which is the most recent swing point that doesn't have any volume to speak of. This would be down at the June 12th level, around $40.40, already at $39.87, with steam picking up to the outside. So now, and as you take a look at this equity, we talk about paying attention to what the large volume days are doing, because that's really your institutional selling. And this certainly had some institutional selling come back in April of 2012 when it had 2.8 million shares to the downside. Well, today's going to top that for sure. If you take a look at this equity back in here right around the July 19th, 2012 timeframe, the next time you have a high volume bar, where's that to? To the downside. You've got selling on this thing. Let's take a look at this bar out here. This bar is the day of October 18th, 2012. What do you have? Institutional selling. All of these high-volume bars really to the downside. The only exception to that was on December 13th, 2012, moved up with about, let's see, how many shares was this? 1.1 million shares. So moving up to the upside with lighter volume, to the downside with heavier volume. What does that tell you about the equity? Now, the last time that you see any kind of real volume out here is at about the $30 level, 31.22 or so, right around, let me get there, 4 million shares. 29.30 actually is the high. Goes back to October 22nd, 2009 out there. So this equity here not looking good at all. Let's go take a look at Perigo, PRGO. So let's go see what that is trading into. PRGO, the ticker symbol, out with earnings. They are trading up $5.39, gapping up. So let's go see what this is doing. This is just doing nothing more than, so take a look at it. We talk about high volume bars out there. So let's go take a look at the high volume bars in this equity. And you're going to see a breakdown that began on November 7th. Of course, it broke down the night before. Let's go take a look at where it broke down from. And it broke down from the close of November 6th out there, actually closed at 115.37, made its way down with volume with 2.7 million shares on that next trading session, getting down to a low of 105.71 out there. You can see all that this equity did here on the way back is get inside the area where it broke down from. Now, it didn't give you the ability to go ahead and catch the move right as it came back to the November 7th level, because it went ahead and turned down on the closing out on November 10th out at a price of 110.23, and then moving down with volume again. Another part of the markdown phase out here inside this equity, 1.9 million shares coming out. So you got a gap down. Look at this thing here. You got a move down on January 24th with 2.3 million shares. So this gap up today, don't buy into it at all. This thing has got troubles to the downside. They're kind of sticking out all over the place out here, and that is on Perigo, PRGO, which is the ticker symbol. Let's go back quickly here. Let's go take a look at the E-mini. Want to see what the E-mini is doing out here. And really, since the open, other than the 9 o'clock pop, which was to be expected, especially the way that futures were trading, where you had the ES Mini pop up to a level of 15.05 out there. Ever since that time period, has been selling off to the downside. So it did get into the overbought territory, so it's doing what it needs to in order to work that level off. We know that the key support area on this is down at 1491.25. So that's going to be a key area for everybody to be watching at any point in time out there, because we know that is a defensible position for the bulls out here. And, folks, if you haven't had a chance to go sign up for the Great Panther Silver giveaway, today is the end of this program, and you still have an opportunity to win. Our next winner is Christina from Tingsboro, Massachusetts. So, Christina, we tried to get her on the phone. Weren't able to. If you are listening on this show or any other show during the day, please give us a call. You are a winner of 1 ounce of silver, a beautiful coin from Great Panther Silver. Folks, go to the homepage of TFNN.com and sign up for it. And as long as you're over there, if you are in the Denver area, anywhere in the Denver area, Tom O'Brien and Daryl Martin on their way out to Denver right now for tomorrow's workshop, Dynamic Trading Strategies, 8:30 to 12 noon at the Marriott Tech Center. It is not too late to sign up for that program as well. So take advantage of that. It'll be an incredible trading session out there. And I believe that's all the programs that we've got. So go over to the homepage of TFNN.com and sign up for both either Tom's workshop, Tom and Daryl's workshop, or the Great Panther Silver giveaway. Let's go take a look. Speaking of silver, why don't we go peek in on silver and see what that is doing. Silver for the last 3 trading sessions, up and down and up. And so what does silver want to do out here? Is silver going to go ahead and make an A to B equals C to up? If we take a look at that pattern, we'd be coming off of the swing point low out here from January 4th. That's at 29.24. That'd be your A point. Your B point, we're looking at the continuous contract, would be the swing point high from January 23rd, and your C level would be January 28th out there. It's got to get over the high of 32.48. That had 44,000 contracts. The first time up there was with 32,000 contracts on January 30th. Two trading sessions ago. Wasn't enough. Yesterday's pullback, 56,000 contracts. Is that telling you something? So it goes up with 32, back with 56. Might be telling us something. So far this morning, up with 28,000 contracts. Really nothing more than a little sideways surge here. It's going to need more volume in order to get over the B point and in order to confirm an A to B equals C to up, which would take silver into the $34 area, $33.99. So that's what's going on with silver. If we go take a look at gold, let's see what Goldilocks is doing this morning. Really the same pattern setup. You had gold try to move up. In fact, I was becoming a fan of gold on 2 trading sessions ago. On January 30th, moved up with 145,000 contracts out there, trying to take out a swing point that's got 115,000 from January 2nd. If we take a look at this trend line here, which has been a defensible position for gold, that's coming off of the high from November 23rd. That's also coming off of the high of January 2nd out here. So let's see the potential in a pattern, because right now it's doing nothing more than really just traveling sideways the last couple of days. If it can take out the B point, is that the right B point? Let me make sure I got that. Yeah, that is. If it takes out the B point out there, where gold would then travel to its next leg would be up to the 1772 or 1742 level. Of course, if we take a look at those levels, what do we have there? Well, if you come off of the swing point from November 23rd down to the hammer candle on January 4th, you'll see the 0.786 retracement creates a Gartley sell pattern right at 1727.40. That is on gold out there. Let's take a peek in on bonds, see what Barry Bonds is doing out here. Bonds moving up, so kind of an interesting day, isn't it, folks? We got bonds up, and we've got the market up $84. Who is going to be right out here? You've got the bonds making a 1.272 expansion off of the set of swing points from January 4th low. That was 143.17 out there, and the high coming in on January 16th at 146.17. I am a fan of being long bonds out here. Why? There's a lot of data. I'll be interested in taking a look at the CFTC data here for the commitment of traders. Comes out at 3:30 in the afternoon each Friday out there. And there are some signals out there that say being on the short side of the bonds is the wrong trade out there. We'll see what today's data shows. Today's data will be through this past Tuesday out here. But bonds moving up, rejecting lower price at this moment. Of course, if you take a look at the chart, the continuous contract chart that we've got on my screen here, you can see certainly that each time the relative strength indicator gets down into that 30 level here, we've seen at least a bounce in bonds. We saw it here as that happened back on December 18th as it made a low of 145.19. We saw it as it came down here and made a low on January 4th when it made a low of 143.17. So have to be careful. I would say bonds would at least, at a minimum, come down or come up and test the trend line out here. And as I draw the trend line, and that's where we'll get the first release or piece of information. That is coming off of the high here from November 16th. Interesting how that's the day. November 16th, high out there, 152.21. You can see all kinds of touch points here from that trend line. So it's a really valid trend line. That trend line, also, you take a look at the high from November 28th. Take a look at the highs from December 6th and December the 7th out there. Take a look as it gets touched on December 28th as well as December 31st. Take a look at what that trend line held bonds in check on January 24th. So it's going to be so it does make sense to me that where we will see bonds travel to, I would think it would make sense to you as well, is travel right up to that trend line. Whether or not it breaks that trend line or not, we'll see. And we'll have to pay attention to the volume up there. But that's what it looks like to me. The 30-year Treasury wants to do is move up into that trend line, and for all good reason out there. If we go take a look at natural gas out here, let's see what natural gas is doing. Really, natural gas having nothing more than an inside sideways trading session. It looks to me like, and I drew this for you folks, I think at the beginning of the week, which was the new downtrend channel that natural gas appears to be traveling into. And that sets natural gas up into about the 270-ish level, 280-ish level before it would move down and test the bottom of its descending price channel line out there. So that is what it looks like for natural gas. Already February, so we're starting to get out, I suppose, of the winter season out here. And so that would make sense. This is really natural gas is a great seasonal trade, usually between the November and March time frame. And, it seems to have petered out a bit early as natural gas made its high, quite frankly, just the opposite, back in November of 2012. So when you're coming out of the seasonal cycle, and I believe if you go to seasonalcharts.com, you can get some pretty good information there to take a look at seasonality of some different commodities that you might follow out there. So that covers the commodities here. Let's go take a look and see what's going on around the world. We haven't done that here. We don't have 30 seconds to go around the world. We're going to have to wait till we come back from the break. I can tell you that we've got the DAX is up 47, the FTSE is up 43. Our markets here, you've got the Dow up 80 points, S&P's up 7. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow up 80 points right now. Composite up 15. S&P up 7. Apple. Oh, let's go take a look. I said first we take a look at the world markets. Then we'll go take a look at Apple. Apple down $2 and change out there. In the case of the FTSE out here, you know, the Bears have showed up, did about 2 days worth of work out here. We'll see if they are just lurking in the woods, because that's what bears do. They sort of lurk in the woods and then boom, they come out of nowhere. Right now, you've got a couple of reversal signals last 2 days inside the FTSE. We know the FTSE has been strong. Of course, the FTSE also being in extreme overbought territory, so it needs to work that way off. If the FTSE closes today below 69.24.38, did I say 69? 62.94. A little dyslexic there. My apologies. 62.94. It's trading out right now at 63.24. That would be a decent pullback by the middle of Basel show. That would give you a real bearish confirmation out there. That is on the FTSE. If we take a look at the DAX out here, real quickly, the DAX here also having some bears show up. So what that really means in the case of the DAX is now it's got a good area of resistance, which should be the high of 78, 71, 79. That's the January 28th high out there. Takes that out, and you have a continuation move. It needs to take that out really in the course of the next couple of trading sessions, so early next week. Let's go take a look at Apple trading down a couple of bucks out here. And as we take a look at, before we look at Apple here, because we got a minute, had a caller yesterday who was calling about Raytheon when we were taking a look at it. RTN is the ticker symbol. And what we were looking at, it was a long-term holding in a 401k. And what we were looking at was this high volume bar that should have acted as a support level. Now, we were looking at the October 2nd, 2012 time frame. Low there was 53.60, had 6 million shares. Raytheon went ahead and busted through that area yesterday with volume accelerating. Did not have more than 6 million shares. Yesterday it did 4.5 million shares. We can see here also getting into that extreme over sold condition. So this morning here, trying to work it out. This black horizontal line coming across the screen. What we can also see that it did is if you come off of the swing point low from June 4th all the way up to the high that was established on December 21st. Yesterday also coming down into that 0.61 area with volume with a wide-ranging bar closing at the bottom of its sessions. Looks to me like the next step on this is going to be 51.25 and 49.03. It can work off this little oversold condition here, but this should have resistance right around that black horizontal line, which could just simply be the low of October 2nd out there. But I want to just simply update that our listeners that were taking a look at Raytheon breaking through a swing point. Is never a good thing, especially with accelerating volume. Didn't have more than that swing point, which suggests that the October 2nd low should get tested at 53.60, but so far doesn't look that good for Raytheon. If we go take a look at Apple now, let's go peek in on Apple, see what she is doing, trading down today. We took a look at the dojis and small-bodied candles over the last 3 trading sessions. We know that Apple just simply also working off an oversold condition. Apple not even able to try to test the downdraft from January 24th out there at 465.73. You tell me, is that bullish or bearish? That's right. It's absolutely bearish out there. Apple today, and you can see the volume here really dissipating. Looks like when you got that, it looks like you've got a distribution of more shares going on before Apple gets ready to take on its next leg down. Next stop on Apple, 395 before Apple decides to move down to the 340 level, 1 to 1.272, A to B equals CD down. Folks, thanks so much for joining us today. If you're off to start your day, off to start your weekend, have a fabulous weekend. We'll look forward to seeing you on Monday. And always remember, you have an amazing power within yourself. And that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of our TFNN family. Have a great weekend, great Friday. See you on Monday.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.